Welcome to the Daily Update Podcast, where I'll go over the action in the market for Monday, September 8th, and we'll see how things look for Tuesday, September 9th. Going over what happened in Monday's session, the S&P had a pretty quiet day, inching up 0.21% to close below 6,500. Trading volume was slightly above average, hinting at a modest pickup in activity, but nothing all that significant. Looking at sentiment, it still continues to be neutral with a noticeable lack of conviction. Despite a positive bias across the short, intermediate, and long-term timeframes, the market continues to feel a bit lethargic, like it's waiting for a catalyst. As far as key data to watch this week, it's a big week for data. Inflation numbers are front and center with the PPI and CPI coming out this week. There'll also be the weekly jobless claims as well as continuing claims, which could help sway sentiment. These numbers will likely feed into the Federal Reserve's next move. Talking about the Fed, the market's pricing in about a 99% chance of a 25 basis point cut when they meet. But here's the debate. Are these cuts about supporting a slowing economy, or is there something deeper, such as the weak employment report from last week that's signaling more economic trouble? The data released this week could hopefully clarify that. Looking at technical and economic indicators, the S&P 500 is holding above short, intermediate, and long-term moving averages, with potential support at the weekly pivot around 64.86. Monday was an inside day, meaning the high or the low didn't surpass Friday's movement, reinforcing low conviction. Some indicators, including the short-term CCI 14 and 20 charts, are flashing extremes, or other indicators are showing negative divergences, while the Vortex and Parabolic SAR are still positive. On the economic front, interest rates dipped to 4.05%, which could signal concerns about growth. The dollar continues to be in a downtrend, giving stocks a bit of a tailwind. Consumer credit did jump by $16 billion, way above the $10.5 billion that was expected. Are consumers leaning too hard on debt? That is something to continue to watch. Looking at sectors and index highlights, growth sectors outperformed in Monday's session. Tech, discretionary, and communication did outperform, while defensive sectors, including utilities and staples, lagged. Small and mid caps, which had a strong week last week, were pretty much flat on Monday. Also, other news concerning the S&P 500 will be the inclusion of Robinhood Markets and AppLovin, which will be new additions starting on September 22nd. These stocks got a tremendous boost from mutual fund and ETF buying. Seasonality context, September is historically a tough month for stocks, but we haven't seen any major declines at least yet. The first half of the month tends to be stronger than the second half, so that's something to keep in mind moving forward. Looking ahead to Tuesday, September 9th, the NFIB Small Business Optimism Report is due, but it's not typically a market mover. The S&P still remains positive overall, with support at the 20-period moving averages. That being said, the short-term indecision and intermediate-term indicators showing some weakness or negative divergences require us to stay vigilant. In conclusion, the S&P 500 is positive on all time frames, but lacks short-term conviction. Data that will be released this week could light a fire under the market or cool it off. It's best to keep an eye on the Fed's rate cut narrative and the economic data that will be released. Thank you very much, and I will talk to you in the next podcast.